you're starting your week with us, hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. The Trade Ministry holds a special event for the 53rd Trade Day to encourage Korean exporters who have been struggling with falling outbound shipments. A long-delayed trading link between Shenzhen and Hong Kong finally launches, giving global investors more access to some of the world's fastest-growing companies. These stories and more coming right up. Korea is marking the nation's 53rd Trade Day on this Monday. And to celebrate the occasion, the Trade Ministry held an event here in Seoul to encourage exporters to keep up the hard work. But as our Kim Min-ji reports, it's been a struggle for exporting firms over the past 2 years.
It's a day for the country's exporters. At an event hosted by the Trade Ministry and the Korea International Trade Association, 680 people were commended for their efforts to boost outbound shipments, while over 1,200 firms were given awards for hitting designated export targets. But the overall atmosphere wasn't as cheery as before, with the number of companies achieving new records sitting at the lowest since 2004. It was also the first time in 14 years that no firm was able to reach the $10 billion milestone.
It was a turbulent year. Global oil prices fell to their lowest level in more than 10 years. There was the unexpected outcome from the U.S. presidential election on top of Brexit. And the global economy remains weak.
In fact, it's been a continual struggle for Korean exporters. Shipments abroad have been on a downward spiral since January 2015, with the exception of a brief turnaround in August and November this year. For 2016 as a whole, exports are expected to fall 5.6% to $497 billion. Imports, on the other hand, are projected to slide 7.4% to $404 billion. With that, the country's trade value is likely to fall short of the $1 trillion mark, the first time in 58 years that it has failed to reach this milestone for 2 straight years. Korea's export ranking is also poised to sink to 8th place from 6th. And prospects aren't all that better for next year either.
Korea's key industries are losing competitiveness among the ongoing corporate restructuring push. On top of that, risk management is needed as there are expected uncertainties stemming from a possible US rate hike and Brexit negotiations.
Going forward, experts call on local companies to foster high-value industries by infusing technology into all sectors, and they emphasize the need for more international cooperation and modernized trade structures. Kim Min-ji, Business Daily.
Korea's foreign reserves shrank in the month of November, seeing the largest dip in 16 months. According to the Bank of Korea, forex reserves came to about $372 billion as of the end of last month, down about $3 billion from October. The central bank says this is due to a strong dollar trend, reducing the dollar-converted value of non-dollar denominated assets. The surge in dollar strength was driven by elections results in the U.S. and rate hike expectations for the U.S. Fed Reserve. Korea was the world's 8th largest holder of foreign reserves as of the end of October, after China, which topped the list, followed by Japan and Switzerland. The new trading link between the stock markets in the Chinese city of Shenzhen and Hong Kong has launched, opening doors for more investment opportunities. Our Shin Se-min reports.
A new door to stock markets on the Chinese mainland has opened. The Shenzhen-Hong Kong Stock Connect kicks off this Monday, allowing investors in Hong Kong to buy stocks on the Shenzhen Stock Exchange and vice versa. It's in addition to the existing link between markets in Hong Kong and Shanghai, connected 2 years ago in November 2014. The new Shenzhen link-up is seen as a key step in opening China's equity markets, which combined add up to nearly $6.5 trillion.
The Shenzhen-Hong Kong Stock Connect represents a critical step in the opening of China's domestic capital account. It also signifies greater development in the internationalization of the RMB. In the context of interconnection, it will facilitate the maturation of the domestic capital market.
Through the new trading link, foreign investors will be able to trade shares in almost 900 firms for the first time, as Shenzhen has been promoted as a technology hub and has a link to the US-based NASDAQ. Global investors will be able to access the Shenzhen market through the Hong Kong bourse. Experts in Korea remain wary, however, as the massive growth potential could also bring an increase in volatility due to the high valuations of Chinese firms. They've also cautioned local investors to bear in mind the transfer tax for direct investments and the potential for foreign exchange losses. Shin Se-min, Business Daily.
The Korean equity market continued weak performance on the first session of the week ahead of major market events, including central bank meetings as well. And we're now joined by our markets contributor, Choi Jin-seok, to talk about stock market performance and upcoming market events. Hello, Jin-seok.
Great to be here.
All right, so Asian markets were all in red for the market open today. With that, how did the Korean stock market end up doing?
The Kospi market fell slightly, while the Kosdaq suffered from a almost 2% loss on the first day of this session. The Kospi fell by 0.37% to close at 1963.36, and the Kosdaq plummeted by 1.98% to close at 575. The Kospi index once fell to 1960 due to unfavorable results coming out from the Italian referendum and stock selling by retail investors. However, the market later erased most early losses held by institutional investors. The Kosdaq, however, performed weak throughout the session, and the index fell below 580 for the first time in 23 months.
Now, the Italian referendum over the weekend drew a lot of attention from financial markets all over the world, but the outcome doesn't seem to be what the markets wanted, right?
Right. Italian voters basically rejected constitutional reform in a referendum Sunday, and Italian Prime Minister Matteo Renzi announced early Monday that he will tender his resignation in the afternoon after admitting defeat in the vote. Global financial markets reacted immediately to the results. The vote sent Asian shares lower, and the value of the euro once fell about 1% against the US dollar from Friday's close. Stock market future indexes in the US and the UK pointed to opening losses as well. But market losses were relatively contained as investors had already anticipated unfavorable results from the referendum.
Well, the results nonetheless will have an effect on the stance of global central banks, including the European Central Bank, which has its policy meeting coming up. With that, what are the market events lined up for this week?
The ECB will hold its monetary policy meeting on Thursday, followed by a press conference by ECB President Mario Draghi. The Italian referendum is expected to add pressure for additional policy measures. German bank Berenberg warns that a potential political crisis in Italy could become the top risk event in Europe for 2017, and it could spark a systematic crisis in the Eurozone. Before the referendum took place, financial news provider MarketWatch predicted the vote might trigger further quantitative easing or QE from the ECB. Experts expect the ECB will extend the duration of its government bond purchase program by 6 months through this week's policy meeting. The program will end next March.
So starting with the ECB, we'll have a lot of central bank meetings going forward and also a lot of speeches that this week ahead of the highly anticipated FOMC meeting on the 14th.
Right. CME Fed Watch, a futures market betting on U.S. rate hike schedules, now shows a 92% possibility of a December hike. Almost all investors and market experts forecast a rate hike in December as well. We have the FOMC on the 13th and 14th, along with the Bank of England on the 15th. After that, the Bank of Japan will hold its monetary policy meeting on December 20th. These meetings will give hints on future directions of global monetary policies might take place in 2017. And in terms of the upcoming FOMC, investors might want to look at what Fed officials say about future policy direction this week. New York Fed President William Dudley, Chicago Fed President Charles Evans, and St. Louis Fed President James Bullard will deliver speeches on Monday local time.
So aside from central bank policies, what other events might be important catalysts in financial markets this week?
First, China's economic indicators will draw attention from global investors. Sluggish exports or even import numbers from the world's second largest economy can spur concerns about an economic slowdown or weak consumption. The futures and option expiration date on the 8th is another domestic factor to heighten market volatility. Expectations for the expiration date aren't bad though. Hana Financial Investment predicts there will be more buying than selling on the day, citing better sentiment among foreigners towards the Korean market.
Well, definitely a lot to look forward to this week. Thank you
Right.
so much for coming in today.
Thank you.
U.S. President-elect Donald Trump has warned American businesses that there will be severe financial consequences for moving jobs or factories to other countries. Our Kim Mo-kyun has more.
U.S. President-elect Donald Trump took to Twitter on Sunday and warned that U.S. companies will face consequences if they move production abroad. In a flurry of tweets, Trump promised to substantially reduce regulations and taxes on American corporations, but said companies that have a U.S. presence but build factories elsewhere and then sell back to the U.S. will be punished. He said manufacturing companies can move within the U.S. with no penalty, but once they move production overseas, they will be hit with a 35% import tax. The latest news comes less than a week after Trump successfully persuaded an air conditioner manufacturer to keep around 1,000 jobs in the U.S. instead of moving a factory to Mexico.
And I said to some of the folks, I said, companies are not going to leave the United States anymore without consequences. Not going to happen. It's not going to happen. I'll tell you right now. We're losing so much.
Trump's latest economic policy is being criticized by some Republicans and Democrats who view the policy as government involvement in the free market, which could possibly lead to corporate bribery. Kim Mo-kyun, Business Daily.
Televisions made by Korean manufacturers are losing market share in China as local brands win over Chinese consumers. According to market research firm IHS, Korean TV brands, including Samsung and LG, saw their market share fall from around 7% in 2014 to 4.5% by the third quarter of this year. Japanese brands dropped from 9% to under 5% over the same period. Chinese brands saw their market share surge from about 77% 2 years ago to 85% by September this year. And industry insiders say local brands are becoming more popular in China as the quality of their TVs catch up with the more expensive Korean and Japanese brands. The Asian digital music market could soon see a growth spurt as a larger number of people in the region use online streaming services to listen to music. According to a study by McKinsey & Company published late last month, the number of digital music users in Asia is expected to grow 15% per year through 2020. Asia accounted for just 14% of global digital music revenue last year, or about $900 million due to lower incomes in some markets and relatively high mobile data fees. Now, that's a third of the revenue generated by sales in the United States in the same year, or $3.3 billion. But the report points out that the Asian market has seen significant potential for growth as the region had 44% of all internet users in 2015 and a quarter of global GDP in 2013. Tech-savvy startups are partnering up with bigger companies to develop new ways of reaching out to the consumer. Recently, Seoul's Dongdaemun Design Plaza hosted an innovative and creative show that considers the possibilities of tomorrow, enabled by future technologies. Our Eunice Kim takes us there.
Put on a headset and a department store appears before your very eyes. Point to a product to access its retail price. Drag it over for automatic checkout. For the brands, new products can be directly uploaded through the VR program. This is just one example of innovation at play on display at the Dongdaemun Design Plaza last month, hosted by one marketing firm.
We wanted to create synergy and convergence by combining our marketing know-how with the technology of outside companies.
Sometimes a careful pairing results in a thoughtful product. The Internet of Things enables this electric rice cooker to not just notify family members when dinner is nearly ready on their smartphones, but also a voice message can be left with the pressure cooker.
엄마 오늘 일찍 못 들어가서 죄송하고요. 식사 맛있게 하세요.
Sensors along a driving course take a picturesque photo of a passing rental car and sends it to the installed receiver. While at this 24-hour convenience store, a facial recognition camera hands out extra points to customers who smile. They're techniques that solicit the engagement of consumers over a simple one-way message delivery. We could begin to see these tech-enabled strategies adopted into the market as early as next year, as companies, big and small, work hand in hand. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.